Good evening, everyone. Welcome to Admiral Markets webinar of 16th of January 2014. Today we are going to talk about the next step in scalping Forex market, where during the webinar we'll show you some strategies. Particularly, I have prepared two strategies to show you for scalping Forex market, which don't use many indicators, and they're mostly based on price action. So no matter if you're a beginner or advanced trader, this can be useful for you, but also you need to know that at least you need to practice it and to be prepared for some challenges, because those are not just automatical systems. They are manual, but they, of course, you need to apply some level of common sense. So today, my name is Nenad Kerkes, also known as Tarantula, and here with me is my colleague, Mr. Chris Warsick. So I will start a webinar today, then I will hand to my colleague Chris. So prior to any webinar, of course, I need to tell you that try to register to get the book. So we have prepared a special book gift for you. It's called Trading the Battle Plan, and you should invite 3 friends on webinars, and if they attend webinar, you will get a book at the end of by the end of the week. So you should invite 3 friends, and those 3 friends should be along with us attending the webinar. So you need also to know that you can apply on Admiral Markets website. A well-known website where you apply for each of these webinars is a standard procedure, so it's not very hard to do that. Today we're gonna talk about, again, scalping, knowing when to scalp, money management, and I will show you some scalping systems which are maybe a little bit advanced, but they're not hard. You will see. I always try to be as simple as I can without clustering many indicators. You already know that. So first, let's talk about money management. We need to know that we need to have 3 tasks set. The first task is called primary task, and that is not to lose a capital and stay on the flow for many years. Second task is to gradually multiply our equity figures, and third task is to earn profits. So the problem for many people is, as you know, they set the third task for the first task, and basically what they do, they lose the money, and then they do not have money to trade with. So success comes down to proper risk management. You can have losing months, you can have losing weeks, but the thing which you should know is not to lose more than you can afford. Okay, so that is very clear to you. So what is the scalping? Because there are 2 basically ways to trade the account. The first way is to trade the account which needs to be, I need to say, leveraged. We use proper leverage to our, of course, to our equity, as we don't want to risk more than 2 or 3% at maximum, but very, very often we should risk a lot less. But you know, when you have a $1,000 account, it's not the same as if you trade a $100,000 account. Because when you trade a $1,000 account, that means that that account needs to be leveraged. It needs to be it needs to be bigger, because you cannot live with $1,000. You know that. So it's very impossible to live with $1,000. Even in poor countries, it's very hard to live with that money, because you need to make a return of investment, also known as ROI. So with $1,000, you need to gradually multiply your account. You need to push that limit you need to push the money above the limit, so you need to use leverage. And I know it's very hard to do one lot trading with $1,000, and more or less it will be luck if you start with $1,000 and end the month with $2,000. It will be very hard, and it will be also luck, because you will probably need to use your margin, so probably all of that money, because of the stop loss which is involved with such trading. So in that way we go to scalping, because in scalping we can use also leverage, but we also use lesser, and we also use we don't use that big leverage, but we can use more or less nice stop for that trade and a slightly lower leverage than if we trade with margin. Because if we scalp, we will do a couple of entries per day. We can do 3, 4, 5 entries, and that is called scalping. And it's also the quickest way of trading. So the scalping is the quickest way of trading. It requires momentum and volatility, because it's very hard to scalp if market is not moving. If market is not moving most of the time, you will probably scalp 1 or 2 trades, and then what will happen is you will probably, if you lose, you will lose. You won't lose much. If you gain, you won't gain much. So that is what it happens when there is no momentum and there is no volatility. Okay, it usually happens like that. Either you lose or either you win, but it won't be much. Anyway, in scalping we use small stops. We don't need a bigger stop for scalping, and I know, and I always say, you need to practice first on demo account. So if you plan to invest $1,000 in your live account, then guys, go with $1,000 on your demo account and try demo account as you would trade live account. Okay, it's the same. So you need to get into your heads that trading on demo account should be the same as trading on live account. I know you can be a little, you won't feel that pressure, because you know that it's a virtual money. But basically what you need to do is to convince yourself that you're trading on live account, and use the same leverage and try to use the same psychology you would use as if trading with a live account. Because if you invest only $1,000, or I need to say it's really not much for Forex. $1,000 is nothing in Forex market. So you need to know that I will show you later the table for scalping, but 0.2, 0.3, maximum 0.5 is lot size you should use, and 0.5 can also be sometimes big for that account, but it requires, of course, it requires very small stops. Okay. Scalping can be very extreme, because it's done on lower time frames. Scalping is done on M1, M5, M15, and it's really an extreme way to go into the market. Really, it's an extreme way to scalp the market with leverage, and it's very fast, because you need to be very concentrated on market movements. You need to be very nimble on your fingers. And you need to be very smart. 0.5, I said, not 0.5, 0.5. I will show you the table later. So you need to be very, very aware if there will be some news. So never try to go ahead of the news. So usually, if news kick in, and you want to trade during the news, very often it will happen that you will, guys, lose the money. So you need really to be very prepared for that kind of things, because as you know, losses which we can experience during the news time can be very hard later, can be very, very hard to recover. because usually during the news, as you all know, movements can be very, very volatile, and you can be really, really stressed out by trading those movements, stressed out. Also, you need to know that during the scalping you will experience most of the time you will trade those breakouts, and usually you will use breakout strategies to scalp the Forex. Some time ago some brokers prohibited scalping. You need to know that you should of course stay away from those kind of brokers, because those brokers are not very certain, they are very unsure, maybe they are not regulated, and today most of brokers allow scalping, but we of course with Admiral markets scalping is a good thing. It's very, very comfortable because we have lower spreads, commissions are very affordable, and of course I always will recommend Admiral market brokers. Scalping can be also dangerous, as we know, and I told you why it can be dangerous, because really it's very fast momentum, but if you scalp you need to be prepared to lose. If you're not prepared to lose, then you're not for a scalper. Then you should trade higher intraday time frames. So whether you want to scalp or not, you should be prepared always for a potential loss, okay? For a potential loss. Also, what should we say more about it? Basically, that is all what I wanted to explain what is scalping, and you probably know that. As I said, it exploits sharp movements, it uses leverage, it requires momentum and volatility, and most of all, it uses small stops. How Forex scalpers make money? Well, you already know that by Forex scalping, you need to be very patient. So patience is the first virtue for traders who want to scalp, who want to exploit those fast movements in the market. So the first virtue is called patience. Then momentum and sharp price movements are also one of the characteristics in scalping the market, but also counter trend scalps, breakouts, leverage. Those are all kind of things which we use when scalping Forex market. Now we have a question: what currency pairs you recommend for scalping? We must have low spread. Yes, Daniel and Heidemann. First of all, I recommend always majors for scalping: euro, dollar, cable, Aussie, and those pairs which usually move all day long. I can also recommend, if you're comfortable with the GBP, Japanese yen, but I'm not sure that you first need to see a price action of GBP, Japanese yen, because price action of that pair can be very, very nasty, can be very volatile, and usually you need to apply higher stops for scalping. But if you ask me what to recommend, I will always recommend major pairs: euro, dollar, cable, Aussie, and of course you can go with yen pairs: euro yen, Japanese yen, British pound. So those are pairs which you can use for scalping. Basically what you need to do is to use those higher range currency pairs. So I stay away from pairs which usually have 30 to 50 pips per day. So they're not so good for scalping, because you can be trapped in the range, and then it's very hard to get even in break even. So that is what I don't want to do. So usually fast pairs which can be tradable all day long. Also low spreads, I recommend 0.5 to 0.5 to 1.2 spread. It's perfect for scalping, because those kind of price movements will usually get you in the trade very early, but also even if you are wrong, you won't lose as if you were scalping with 2 or 3 pip difference. It's a big difference between 0.5 or 0.8 and 2 pips, because sometimes those 2 pips can really make a difference in some trades. So that is, if you ask me about the scalping and recommended pairs. Because also you also know that if you go with pairs which have a low difference between a buy and sell price, that is called spread. You know that those pairs are frequently traded, and you know that most of the traders and banks trade those pairs, and that is because they have low spreads. Pairs which have big spreads, they're not traded so often, they're not traded with that big amount of money, so you should stay away from that. I will show you how tight should stop loss be for scalping, how many pips. Basically for scalping, it depends on the strategy. But usually I will present you later 2 strategies which you can use. But usually what we do is to, let's say that if you want to go short trade and you want to put your stop loss above last high, and that stop loss usually is somewhere around 10, well, to 15 pips, depending on the pair. Because sometimes you will know that your stop loss can be hit multiple times. But even though if you are right, later the price can go into your direction. So even if you're right, well, that stop loss, if it's hit multiple times, then that can lead to so-called death by 1,000 cuts. It's called death by 1,000 cuts. So you will lose money faster than you made 1 or 2 wrong trades with 30 pip stop loss. So what I do is I always recommend to put your stop loss above, let's say, last high, or use hourly pivot point indicator, putting your stop loss above or below support or resistance levels. Okay, that is how I do it usually. Low spreads also, they are important. Patience, we said, exploiting momentum and sharp price movements. Counter trend scalps. Scalpers make money also with doing counter trend. That means if the trend is going in one direction, they usually reverse the trend in their direction, and the price will usually hit predetermined price. So also, as I said, their very sharp price movements can be exploited with counter trend scalps. But of course, for counter trend scalps, you first need to be aware of basic price movements. To be able to scalp counter trend, you need to know the trend first, because the trend trading and counter trend trading is completely different kind of things. So most of all, I never recommend new traders to go with counter trend scalps and counter trend setups. What I do is usually I want to teach them how to scalp effectively with trend, and then if they know how to do that, then we can move on to counter trend and other kinds of scalping. Okay. Also, we need to know a lot about breakout, because breakout is done also on lower time frames, and sometimes breakout trading can be really profitable if we know how to exploit it. Then what should we know about leverage? Leverage can be also good. Leverage can be our friend if we know how to use it, but usually what we do is to go with a low leverage, just to be sure that we won't lose much. In other words, leverage which we use for scalping of course depends on our stop loss, and generally trading depends on stop loss, or if you have, maybe there is also other way, if you want to risk a lot, then you need to be able to pay a lot. So if you lose I don't know, $1,000 in a single trade, then you should be aware that you need to have $1,000 in your wallet, so you can add your funds to your account. So that is a way of people who trade but go with their high risk trades. And I personally know a trader, we traded together. He was very, I can say he was very risky trader. He is really a great trader, and we did trading together in the same firm under same flag, and I know he was really very risky, because what he did is he opened trades basically with thousand, not thousand, but let's say 500 or 200 pounds per pip, and usually he gets with 3-4 pips, and then he closes the trade. He starts with 100, then if the trade is a little bit in a loss, he adds 200. So it was a really risky way to trade. But why did he do that? Because he had reserve money, you know. He had reserve money. He had a lot money in his saving fund, so he could have risked a lot. So he wouldn't be very stressed if he loses 10,000 in one trade, because he had really a lot of money. So that is the way how some traders do. But of course, I don't recommend doing that, because if you do that, you know, you will be very stressed out. So go with standard trading, go with proper money management, because it's very hard to recover, and it's a lot easier to lose the money, and it's very hard to recover. So that is why you should think about those price movements which will not affect your account in that way that you lose it in a couple of months. So that is always goes to leverage and proper risk management. Don't scalp on very low volatility and very low momentum, because probably you will be trapped in a trade. Some guys, some traders prefer the range scalping, you know, range scalping, selling into resistance, grabbing 5-10 pips, buying into support, grabbing 5 to 10 pips, and that is all they do, scalp the ranges. Many of those methods which we know and teach are not based on range scalping, because if trend kicks in, range traders are gone. So I don't recommend range scalping, because usually when you scalp range, that means that you go with low volatility and low momentum, and the price can be nowhere. So you're just in the middle of nowhere, so you don't know where the price will go. So it's best to wait for a proper setup and proper way to scalp. Also, best sessions to scalp, of course, London and London-New York cross sessions. Good scalping setups are usually found 10 minutes prior and 10 minutes after top of the hour, and of course first 3 hours of each session are suitable. That is what I usually do, scalp the first 3 hours of the session, and that means you usually scalp the first London, then you move to New York, and then you can, if you want, you can go with Asia. But for London traders, as you know, it's too late to scalp, too late to trade. For us London traders, it's very hard to trade in that time, because price is usually going in complete, totally different direction. Also, don't scalp NFP days, bank holidays, stress tests, 15 minutes prior to and 15 minutes after the strong news release. Wait for the price to settle down, and then you can go with scalping. But first, wait for the price to sell down. Okay. Now, scalping is usually done on 5 and 15 minute time frame, except some extremes with 1 minute scalping. So usually we do that on those time frames. Risk is always based on overall risk per day plus total risk per day. If the risk is 3% per day, account is, let's say, $10,000, that means that the total risk is $300 per day. Okay, guys? So you need also to know that if you go with 3% risk per day, you see how the table says, I will respond quickly to a question. What is stress test? Stress test is something which central banks do in order to test their commercial banks for liquidity and volatility. Don't be stressed about stress test. because nowadays stress tests are not they are not conducted very often, and usually if they are, there will be announcement that the stress test will be coming soon, and traders should be very aware of that. Of course, in my analysis and in my blog on Admiral Markets and Spiders, then I will always warn if there is stress test coming. So don't be worried about stress tests. The famous stress test, the last famous stress test was conducted, I think, some 3 years ago, when the price was really moving very, very erratically. I remember I was watching, and even I tried to trade the stress test with very low average, but it was really stressful, because the stress test, what was happening is basically the stress test gave the price so big momentum that the price changed 5 to 10 pips in a mere second. And I can remember that it was 30 or 50 pips in 2 or 3 seconds. Changed. It was going down, then it was going to the upside. It was really, really very, very. That was a stress test of USA banks. So I think maybe it's 5 years now. I think it was 2009 or 2010. So it was very, very hard to watch also. So those are that is the nature of stress test. So what I recommend is, I recommend 3% risk per day, and if you go with that 3% per risk per day, then, well, we need to know that that is 300 total risk, $300. So this is lot size according to your stop loss. If you go with 10 pips stop loss, we risk with 0.5, we risk $50. So we can take 6 trades maximum. If we go with a lot size, then we can risk, if we have a 10 pip stop loss, then we can risk 3 trades. If we go with one lot and we go with 15 pip stop, then we can make 2 trades. And if you go with 0.5 and 15 stop loss, we can have 4 trades. So it all depends of your stop loss. So my advice is, if you go with 10 pip stop loss, or anyway between 10 and 15 pip stop loss, go with 0.5 on each $10,000. So now you know what I was talking about. And yes, if you go with $1,000, then guys, well, what you can do is to go with even, well, you can go with 0.1. Well, I know that is nothing, basically there is nothing, but you know, $1,000 is not much in Forex market, and you need to save that money for trading. In example above, we see that the 0.5 loss seems optimal for scalping the account of 10,000. So for each 10,000 K, we rise our volume traded for 0.5. My trading style fits into that 3% of maximum risk per day. That gives a potential of 4 to 6 consecutive losing trades, which is very hard to happen often. Okay. Now I will present you 2 strategies before I hand the webinar to my colleague Chris. I will present you with trend line scalping with Bollinger Bands and trend line scalping with triangles. So first of all, you need to know that you need to have Bollinger Band without middle line. That indicator is called bands. It's very easy to find on Google. So just go in Google and type bands indicator for Forex. You can, in indicator properties, you can remove the middle line. So you need to have middle lines. You need to have middle line out of the charts. Only Bollinger Bands without middle line. Set on 200 and set on 100. So 2 pair of bands. One band is set on 200, other band is set on 100, and stochastics, which have 4 in 3 7 in so 4 in 3 7 are values of stochastic periods. 4 in 3 7. Now rules for short trades. Of course, the first rule is, ideally we should have an overbought stochastic. It's above 80. But entries can be taken when stochastic is very close to overbought if trend line is broken. Then price should touch or pierce the top 200 or 100 Bollinger Band, but ideally we want the price through the touching both Bollinger Bands. So those are rules for short trades, I mind you. We want a valid trend line to have formed 2 or 3 touches, and ideally 2.5 hours to 3 hours long. So that is 30 to 36 M5 candles. Entry is at the break of the trend line. So this is the example. So if this is a trend line, this is valid trend line, because you see the price is penetrating to lower Bollinger Band. That is the first rule, okay? Now, the price is retracing. It's going up. This is, we can count the candles, but if we look at the time, we see that more than 2.5 hours have passed, and we wait for trend line breakout. The price has penetrating through the first upper Bollinger Band and start retracing downwards. Then we see this candle has broken the price. That is the time that when stochastics are very close to 80 levels, so we can go for scalp. You see the price went down, and you can see that stop loss is usually put above the last high. Stochastic is 1437. Next trade is, of course, long trade. This is 5-minute scalping, so you can go to anywhere from 5 to 15 pips with trailing if the price moves above 15 pips. Okay, so you can see here the same thing, but we want to go with the long trade. Price has been going all the way down. As you can see, the price has been going all the way down the lower Bollinger Bands. You can see that, and when the price is going down, we need to put a trend line. Trend line is trend line. Later, I will answer your question later. So trend line has been formed. There are more than 30 and 36 candles here, and then when trend line is broken, you go with a break of trend line if the stochastic is very close or ideally below 20. Okay, so you can see that this long scalp could be very good. And now set up stochastic to have those 2 yellow lines. It doesn't matter. You just need, you open your stochastic indicator. You need to open your stochastic indicator, and then you just you go to level tab and you add 80 and 20. But stochastic have those lines by default, 80 and 20. So if you open stochastic indicator on your MetaTrader, you will see both of those lines. They will not be yellow, but they will be visible on your chart. Okay. So again, rules for this is we should have overbought for short trades. We should be overbought stochastic. Of course, for long trades, we should be oversold. Okay. Then you just these are rules for short trades. You just put it other side for long trades. So price should touch or pierce the top 200 or 100 Bollinger Band, but ideally we want the price through or touching both Bollinger Bands. Then we want a valid trend line to have formed 2 or 3 touches, and ideally that trend line should have at least 30 to 36 M5 candles. So these are rules for short trades. You can see that the trend line has been broken here, and stochastics are very close to 80. Then in this example, we can see that the trend line has been broken here, and stochastics in that time of the break were very close to oversold. Now the triangle breakout scalping, we should establish a trend on M30 chart. You know how to, you should be able to know what the trend is. So if the trend is up on generally intraday, we talk about intraday, if generally trend is up, then you can go for long trades, and if the trend is down, you generally want only to go with short trades. There is only a single add-on to that rule. You can go you can trade breakout in the trend direction, or counter trend is ATR has been reached. So if ATR of that currency pair has already been reached, you can go with counter trend. So first, you need to open your M30 chart and grab an automatic trend line indicator or draw it manually. If you need that indicator, send me a private message on my email. Send me an email on tarantulafx@gmail.com. I will mail that automatic trend line indicator to you. Spot Fibo indicator, and you can Google for it, and you go with trend direction breakout. So you can see cable 30-minute time frame. Trend is down. You see the trend is down, and you see generally the trend line has been broken. At the break of the trend line, you go with a short trade, taking the profit at the first or the second spot fib level. So spot fib is very good indicator. It's used automatically. It plots automatic Fibonacci levels, and you can go with scalping. You can go with scalping with spot fib indicator. Okay. So wait for the trend line break. Okay, and then exploit the price action to the downside. Okay. First, wait for the trend line. Then you go with the breakout to the next level. So those are trading strategy for scalping. They are a bit of they're not so manual. As I said, they're not so automatic, so you need to apply common sense. Or the first example, you need to know the time, so 30 to 36 candles trend line, and then stochastics needs to be ideally overbought for short trades or oversold for long trades. Second example is triangle breakout scalping. You need to know a trend. Then on M30 chart, you need to, okay, if you send me email, I will get you trend line indicator, and you can always try to trade breakout in the trend direction. Or if you're very sure that there will be a movement to the upside, the counter trend, you can go with counter trend. But generally, the rule is to go with trend direction. Okay. So those were the rules for those two scalping methods. Probably during the March, I will present you Renko and range bar charts. Those are advanced methods of trading, so you need to be ready for that. Now my colleague and friend Chris will tell you additional things about scalping. So if you want to get an indicator, send me an email at tarantulafx@gmail.com. I will send it to you. So now, Chris, you can continue to go on, and thank you very much, guys, for listening to me.
Thank you, T. Great stuff there. Good evening, everyone. We're going to take a look at the system that I wanted to show you here. Let me first share the screen. Good, good. I don't have to do the intro. That's all said and done. Let's see. I still had a slide here that, well, let me go through it quickly. Why not? That would show you the advantages, but I think that T already showed you that. But let me just get the right slide here. Good. Yeah. So advantages: not being exposed to bigger market movements that might go against your position. As a swing trader, that can happen. You get the short-term pressure to one side that extends and extends, and that's of course the stop losses that are in danger, for example. Of course, the scalping is not for everyone. Let's face it, the time requirement is intense. The psychological side is intense. The battle plan needs to be very well prepared. Emotions, trading plan, reaction speed, attentiveness, awareness, consistency, they all have to be optimal. The awareness of multiple time frames could be an advantage, depending, of course, with system. If you use a very mechanical system, maybe less, but if you use a very discretional system, you have to be very well prepared and know what's going on, and really a lot of time frames to get the sense of where the supports and resistances are on all levels. So it depends, of course, what type of trader you are. So it's definitely not for everyone, but let's take a look at it. If you do think it is for you, that's why you're here, of course. Let's see. Now, important things, consistency and a tight spread, because of course that is a heavy cost spread if you are trading with a high volume, and it does add up if you're trading with a stop, if a spread is 4 pips or for example 1. That does add up quite intensively. I'm going to show you one mechanical scalping system that I know of. Other than that, I want to talk a bit about support and resistance because this is more like a very mechanical one. I know other people who are more trading discretionary scalping systems that are looking for natural support and resistances and looking for some reaction to those levels in a way, and taking the flows of maybe one currency. They're looking at, say, the euro dollar, for example, and they will take 10 to 15 trades on a day and try to take the smaller ups and downs that you could possibly perceive in that day. That's quite a lot of trades, by the way. But some of the people do it that way. They're trying to look for the natural flow of the currency and mainly use support and resistance, but it's a very discretionary way, and it's very difficult to build up that expertise and experience and, above all, confidence to trade it as they do. This is more discretionary, which makes it easier to implement at the very start, let's face it. So let's talk about this a bit more. It's a 1 minute bar, basically. It's a Bollinger Band that is the primary tool on this 1 minute chart. It's the euro dollar. It's the London session. It's not an Asia session. You're looking basically for a breakout where the price is piercing through the Bollinger Band. As you can see, it's a 2 or 4 band deviation, and let's see, that's about it. I think 5 period. So what you're looking for, this is how it would look like. It looks pretty scattered, but it's actually just 2 Bollinger Bands. The black one, of course, tighter, and the magenta looser. And what we're looking for is an impulse, basically a breakout 1 minute candle. What we're looking for is a 1 minute candle that a situation where the Bollinger Bands have been contracted to a very quiet point, where they're basically going sideways and are flat. So we don't want, or contracting, we don't want to see a big Bollinger Band. We want to see a flat one. And then you will see basically the first push outside of that band. Let me see. Okay, I'll dive into the rules here a bit more. So I already said this. Basically, Bollinger Bands contracting strongly. They're kind of like flat, very very quiet. And what we're looking for is a break, a pierce or a breakout of the candle through that Bollinger Band to either side, in fact. So let's take a look at this again. This is a bit easier to look at. It only has the tighter one. So the very first example with the green circle, you see the 1 minute impulse. You see prior to it, Bollinger Bands tight. So there is a good close also right at the Bollinger Band. What you definitely want to look at is that there's no wick involved in that particular breakout candle. It has to be a strong close, which means the close right at the high of that candle. You can see the second example too, quiet, contracting, almost, the Bollinger Bands almost like hitting each other or going to each other, and then you got the candle, bearish candle hitting the bottom, and then the down run. Third example too, the close near the high, or the high near the close, and piercing through or hitting the lower and the upper side of the Bollinger Band. Right. So this is what the system is looking for. Now, of course, the trade management is again a different story. When you're looking for trade management rules. First, some optimizers, though. Sorry. the Bollinger Band closer together but not tight. So depends how you look at it, but it basically means that there's a high chance that the market will pause for the Bollinger Bands to contract. So you need a bit of patience, not to jump here there too soon. You want to sit on your hands till you really see something tight. You can even measure what the distance here on this is. It looks like approximately, I think if I know by heart, about a pip or two max. The width of these Bollinger Bands. This is the tighter one, once again. So you don't want to be too anxious about that. You want to really wait for something that's really nicely compressed. I already said it. The second point is that the first breakout bar must have something very close to this strong. It must be definitely an impulse. It must be a breakout bar. Anything with the wick, obviously with the bigger the wick, the more weakness there is. That's just a general rule, what we can use in Forex trading, of course. So in this case, we're looking for a impulse bar. So once again, that would be the close near the low or high. Point 3. Yeah, you want to, one optimizer, of course, always is if you have a bit of awareness of the multiple time frame analysis that I already said, and you have an idea of major levels, key levels, major fib levels, major support and resistance, major trend lines, major tops and bottoms. I think I said fibs already. You want to be careful of those levels because obviously this strategy would work not as properly as it would otherwise if the currency is bumping into such a level. So that is a bit of a discretionary part of it. It would definitely optimize it. You want to be, of course, careful with that too. You might want to test your knowledge of these levels. Obviously, if you're filtering out too many profitable ones and not filtering out too many losing ones, then you might want to, sit down and rethink the discretionary part of the strategy, right? And maybe not do that or reanalyze it logically. So keep track, monitor that, evaluate that. That's why evaluations are so important as well, just to see what our weaknesses are, what our strengths are, and capitalize on those, continue with those, and try to avoid the weaknesses. Just to give you a silly example, I played squash, and 6 months ago I was playing against my friend. I lost very badly. Within a couple of weeks I was even to him, and the last 3.5 months he hasn't won a single set. And basically I just always focused on what I can do better, what I can do better to improve weaknesses and capitalize on strengths. Yeah, this is an example of such an optimizer, a wick on top, not optimal. In the first example in the middle there, where you see the purple circle, that's a bit of a wick there. So it is a pierce or a break through the Bollinger Band, but not the one that we're looking for. It's the second example is the 130 even number, and you can see there is a big 1 minute impulse bar piercing through it. There's no doubt about it, but it's hitting 130. And the currency then after that went down pretty substantially, as you can see, for this 1 minute chart at least. 25 pip drop, that's a pretty decent run. So that's an example of discretionary things you want to be careful of. So let's move on to the actual rules, the trade management part of it. So because it's a 1 minute chart, you're not looking for anything very, very high tech or very, very fancy. The stop losses or the target to take profit is therefore a modest one maybe from a swing trader's or intraday perspective, but this 1 minute chart we'll be looking for 6 pips in fact. You want to trail stop about a half a pip behind the high or low of the last minute candle. So obviously if you're in a downtrend, you're trail stopping the high of that candle, and if you're in an uptrend, you're trail stopping the low by a half a pip. The trail stop prevents basically a major, kind of problems if the currency doesn't get that continuation in the drop in the breakout. So you want to protect yourself by trail stopping that. So being tight, it's a very tight strategy, as you can see. So it's definitely trying to catch these very, very, very small microscopic moves, and therefore you're really on ball on top of the market and price. It's about a 50-50. You could expect about 5 to 2 pips, depending on your broker spread, right? Also, that has to be said, depending on the execution of your broker. So if you're with Admiral Markets, that's a great choice. So that depends on those things. Because it's a scalping, very tight scalper strategy, obviously that is an important factor. Oh, let me check the settings for sound. No, I have the right microphone. So, not sure why you don't hear me properly. I have the microphone pretty close as well. Should be fine. Maybe you should check the sound level on your end. Oh. Okay, thanks, Mason and Romas. The others have no problem, so I think it could be just to check the volume. Okay, Lau? That could help. But that is a rough expectation of what you can expect during those volatile hours of London and New York. ATR 2 or higher, that also would give you an idea of the power of the impulse of that move, for example. Okay, so let me dive into a bit of a, let's see, discretionary way of trading. Let's see, let me take this off 1 second. This is the euro dollar 1 hour chart, by the way. Alrighty, so let's take yesterday and today as an example, right? Or we can even, oh, let's not go back too far. But we were in the live trading room, right, together, and we were looking at this bull flag right in here, right? Bear flag, excuse me. And saying, we got momentum down, right? We are seeing price underneath the moving averages. This is a corrective move up. We still have space from a, not that you necessarily need to know this, but there is still space to a daily support line like this, for example, right? So we knew that there was still space potential to the downside right to that line where it also bounced off. And we know that from a 4-hour perspective, if you use this fib like this, just in case that would be support, right? We knew that the 786 or 886 could be a bouncing spot in combination with that trend line. So we're about halfway that playing field with a bear flag halfway with an impulse prior to that. So if you're looking at it, at scalping it, as I said, I'm not personally, as you know, for those of you who are in the trading room, I am not a scalper. But I'm just saying you that I know traders that use discretionary methods like this, who use multiple time frame analysis and fibs and support and resistance to build a trading plan like that throughout the day. It is a lot more riskier than, of course, a more mechanical approach. But I'm just trying to give you an idea how they could approach it. As I said, I'm not implementing that myself, but I know a group of traders who are really trading this intensively, the euro dollar. And for example, they could easily look for a sell off of this trend line top, for example. Either maybe look at the 1-minute chart, look for some rejection there if they see this topping, or maybe even I don't know exactly. They could wait they could even take it right at the top of the trend channel like this, which is a bear flag, of course. Then the obvious target could be the bottom of that channel, right? They're looking at about a 10 pipper, which is not bad at the very early part of the morning. Then upon the break, they could re-enter again try to seek the next fall of, again, about 13, 15 pips. The pullback here, if you then fib the pullback like this, well, there you go. We got a 38.2 fib. Maybe that could be one scale in. The second could have been at the 50 fib, so that didn't get reached. Target minus 272, right? So that's a fall of another 16 pips, for example. If they see maybe a pin bar like this off of the 272, they could expect to move back to the moving averages. So a buy here with the target maybe somewhere at the top of the moving average at 25. And this is highly risky, and this is all theoretical. As I said, I don't do this, but I'm just trying. I know that there are guys that trade the $0 very intensively, so using these kind of methods. So the next one, if you would look at it from like a perfect day, let me say it this way, right? Break of this triangle. So just using these kind of chart patterns as well would help, and boom, you get another fall, for example. Now the target of that could be the 786, because we know that that is a bouncing spot. Eventually we got the 886, and when you get to the 886 and you get to the trend line, and it's already, London is over, right, around 1640, 4:30 p.m., then you know that the downside is over, because basically the momentum is gone for the day, and you're going to go in retrace mode, and it's basically going to go bounce up and down. And that's what happened. It just bounced up, gave a hook back. In my opinion, like from a swing trader point of view, I know that this downside is over. I know that we're a support. In some cases, I would then be even hunting for a buy here at the 786 at this hook back, you know, because I'm more of a swing trader. As a scalper, of course, you wouldn't do it. You don't want to trade, depending, of course, which session you trade. Though, if you're trading London and New York, you wouldn't do that particular trade. Another time, I told you in real life, the time factor, what I look at, most of the time if you have 5 or 6 candles that don't break a bottom or top, then that particular impulse is over. And what do you have here? 1, 2, 3, 4, 5 hourly candles not breaking this bottom. That means that this downside is over, and therefore the hook back, the downside, most likely not going to break this bottom. That is an extra reason that from a swing trader perspective to put a fib on this upside and say, okay, this bottom is not going to break, stop loss underneath, and buy the deeper fib, right? The name for the minus 618 target right here, or maybe the minus 1000 or minus 168. Eventually the minus 168 even got hit at 136.46, and would have been about 60 pipper to the upside there. So, but that's a different trade in a way, okay? But in any case, you can see the primary point of what I wanted to make is that you can see the downside is over at such a moment. Today, what about today? Well, we woke up, let's see, this is 2 hours ahead. This is 2 hours ahead, so that means London is 9 o'clock here. European Open is at 9, right here, okay. Today was a bit of a more choppy day, as you can see, obviously. It didn't have that trend direction as the previous one. We had several bounces again off the support level, more or less, that provided one big bounce, one small bounce. Now we're poking through that again. We had a resistance of this downside about 61.8 fib, as you can see. Also, we know that that is the minus 168.18 of this first fib up, and that was a resistance spot. So today was probably a bit, depending on, you know, it wasn't as trendy. So that's always a bit more difficult if it's choppy like this to trade it. When it made this down, let's see where we start this day. Here, this was still a potential bouncing spot, just like this was resistance. So it was bouncing between support and resistance. It wasn't an easy day. If you look at the time frame rule, this upside was toast when we had about enough candles here, right? It got rejected off of the 136.50. So that's a potential. Personally, why I like swing trading a bit more is because of the fact that I like trending modes, and with scalping you bump into a lot of days like this. I used to scalp and intraday trade the pound dollar a while back, and yeah, basically what I liked about swing trading is just that I can focus on the trend. I found the trend the most fun part of the element of trading, so I thought why not just trade only that in a way, and I like focusing on trend. And with scalping, you obviously need to be more diverse in this aspect, or not necessarily, but some days if you focus on one currency, you will not have that trending mode. If you only focus on pound, for example, you might have a very choppy day. It could be difficult to trade, unless you maybe focus on multiple currencies to scalp those. But then, of course, you run the risk of not being able to focus on that one particular currency as much as maybe you need to a certain degree. So that's something to think about. That's about it, I guess, from my side. Any questions, maybe? I mean, the advantage of focusing on one currency is that you know it really, inside out in a way when scalping. But if you look at 2 or 3, it does give you the more maybe broader options to pick an environment that you find a bit more pleasant to trade.
So guys, if you don't have any further questions, I hope that everything is clear to you. So we have shown you some trading methods and trading strategies you can apply to your trading. So if you want to ask anything about it, go ahead. Daniel, I'm not sure if you're asking Chris or me. Could you go through the entry in scalping? Chris, maybe you can explain your particularly how you enter the trade, or I think
Yes.
Yeah, Chris, yeah, okay.
It basically, when you see that bar, it's directly at the next bar. Let me see here. Let's see, where's okay. Yes, so basically upon the open of the next candle. So if you see a candle like this, it would be upon the open of the next one. Market, not any pending order, because it's just too fast. So you're going to have some volatility in that because of the fact that it is a market order, but it would be difficult to do it with a pending order with this time frame and this speed. Let's see. Kalen is saying brief triangle breakout scalping once again. T, you were talking about that? Or did you mean maybe my euro dollar example of this triangle? I'm not sure. Did you mean this triangle that I had on the chart like this, Kalen?
It's my second method. Yeah, no problem. Yeah.
Kalen has a question.
Yeah. Okay, guys, if you have any questions more, because we have already been out of time for webinar, I will show you again entries for triangle breakout, but that will be for today. We will have maybe other scalping sessions and so on, but for today we are we are almost over. Okay, thank you. Chris, you can give me a presenter screen, and then I will show Kalyan how to go with triangle breakout. Okay, here it is. Here it is. Triangle breakout method. First, you need to open your M30 chart, then grab an automatic trend line indicator or draw it manually. If you need an indicator, send me a private message via Tarantula FX@gmail.com. That is my email address, tarantula@gmail.com. I will send you the indicator. Also, spot FIBO, you need to have it. Google for it. Forex Factory username. Okay, Forex Factory username is Tarantula, but like this. This is my Forex Factory username. It's T, then that monkey letter, then RANTULA. So Tarantula is you. Okay. So establish a trend on M30, then go with trend line, automatic trend line indicator. It's very good for this. Spot FIBO indicator, Google for it, find it. It's not hard to find it. And first of all, if you are a new trader, trade breakout in a trend direction, or if you want to go counter trend, then go only if ATR has been reached. The first thing is to mark the triangles so that trend line indicator will mark it for you. You go at the break of the trend line in the trend direction. So if the trend is to the downside, then you go with breakout. Remember, this is scalping method, so you want to take profit very close to this spot FIBO lines. So you can see this is a M30 example from today. You can see that the price has been hit after the breakout of this triangle. Also, you can see this USD CAD, the price is going to the upside, it's uptrend, and the break of the trend line is the entry, 2 or 1 pip at the break of the trend line. Usually there will be an arrow signaling that is a time to enter, okay? So, Kellyanne, is it clear now? Is it clear now? Do you wait candle to close? No. Usually I go at this method is for immediate break of the candle, because sometimes it will go straight to your target and the trade will probably be invalid if you enter after the pullback. So it exploits that first break of the trend line. The target is spot FIB indicator. So if this is the breakout, you can see the next level described by spot FIBO indicator. So the targets are always fib levels. If we, let's say, if we had entered here, let's say, the target will be there. If we enter there, as we see, the target has been hit. Okay, and the stop loss is usually above the last high. So you can try to trade it and to practice it. Okay. Thank you for attending the webinar. Thank you, guys. Talk to you very, very soon. We will have many more webinars. Thank you, all. Thank you, everyone. And, of course, be always with us. Go with us and also follow us on Admiral Markets, Twitter, Facebook page, and on, of course, try to register to get that free book. It's called Trading the Battle Plan. It's very good. You can be certain that it will help you with trading. So thank you again. Talk to you very, very soon. And bye-bye all. Cheers.
Thanks, everyone. See you soon, and have a great weekend and good trading. Cheers.